Watch this video and in just 10 minutes you will learn how to use Pythia System to improve the quality and consistency of your market analysis and trading decisions. You will learn how to identify weakening trends, changes in market structure, and shifts in market conditions earlier and with greater confidence. Instead of spending hours in front of the screen, you will be able to evaluate the market faster and more efficiently. At the end of the video, there will be important information that will allow you to start using the system immediately after watching. The system is designed to remain readable without cluttering the chart, both on PC and on mobile devices, and can also be switched into minimalist mode if needed. Pythia includes a built-in self-diagnostic indicator that shows how many system scenarios were confirmed on the selected instrument. The system consists of 5 indicators. 3 analyze the selected instrument directly, while 2 monitor intermarket relationships. The following elements are displayed on the chart. The first and most important element is the signal aggregator, compass scale. It aggregates all system signals for a specific instrument based on their weight and duration of influence. The vertical compass scale reflects the divergence between price and market energy, as well as the direction of displacement from the center of the scale, upward or downward, toward buying or selling pressure. Since most system signals are leading signals, compass scale inherits this property. It helps quickly evaluate whether the current price movement is supported by broader market conditions. If you are new to the system, you can rely primarily on this element while learning the rest of the signals. 0 to 35%, weak displacement, 36 to 75%, medium displacement, 76 to 99%, strong displacement. The next major signal is Macro Divergence. This signal is often associated with deep corrections or changing market direction. A green bullish macro divergence reflects strengthening buying pressure, while a red bearish signal reflects strengthening selling pressure. Time to collapse and collapse map zones. These zones represent the system's early warning layer. They are designed to identify divergence between price and market energy earlier than traditional divergence signals. Each zone includes an energy label in percentages, showing the strength of the divergence. Green zones are bullish. Red zones are bearish. These zones may indicate increasing instability, possible corrections, or changing market conditions. Trend to flow mode. A blue energy line. A relatively rare but important signal indicating that a strong, directional flow may currently dominate the instrument, reducing the reliability of counter-trend signals. Impulse shifter. A strong signal associated with short-term corrections or temporary shifts in momentum. The average duration is approximately 6 bars. Low energy. Uncertainty cloud, similar in function to impulse shifter, but with lower energy. It may lead to temporary slowdowns, pauses, or smaller corrective movements. Micro Divergence, a weaker signal indicating the possibility of short-term corrections or temporary pauses in movement, includes an energy percentage label. The next important block is Liquidity Traps. Purple spheres represent energy trap, while blue spheres represent price trap. Energy trap reflects strong order flow without a proportional market result. Price trap reflects isolated aggressive attempts to move price without broader market participation. Both traps help identify possible movement exhaustion early. Collapse micro divergence. Moments where micro divergences appeared and then disappeared are marked with small triangles. Clusters of such triangles may indicate increasing market instability or unresolved pressure within the movement. The next block is Gartley Harmonic Patterns. They help identify possible correction completion zones and areas where movement continuation may become more likely. Green zones indicate movement targets. The brown zone indicates pattern invalidation. Colored volume mood bars candles. This is one of the final confirmation layers before making a decision. These candles show whether the market currently supports movement with volume participation. Green candles, intrabar volume is higher than on the previous candle, meaning participation is increasing. Red candles, intrabar volume is lower than on the previous candle, meaning market participation is weakening. Bright candles, market volume is above average for this asset. Muted colors, market volume is below average. Purple candles, extremely low volume, representing thin market conditions, vulnerable to random fluctuations. All elements discussed so far work directly with the selected asset. Now let's move to Intermarket Analysis. Its purpose is to show how stable the market currently is and whether the movements of major futures and indices remain aligned with each other. When markets remain aligned, movements across instruments usually become cleaner and more structured. When markets become fragmented, movement quality and consistency tend to decrease. Market regime, a horizontal scale. The more segments are filled, the more chaotic the market becomes, reducing the reliability of market structure analysis. Flowmax reflects the direction of large capital flows. Is the market currently risk-on? Is it in uncertainty? Or is capital beginning to move defensively? If this is your first time watching this video and the system seems complex, do not worry. To help you get started, there are 2 AI Telegram bots available. They do not analyze random charts. They work specifically with Pythia System charts and act as an interface for faster interpretation of system data. You can simply send the bot a screenshot of the chart and it will generate a short report describing both the selected instrument and the current intermarket environment. The report intentionally contains only key information to help traders evaluate conditions quickly. Regime, the degree of intermarket alignment. Action, risk conditions in which strategies may currently be more appropriate. Bias, the direction and strength of market energy displacement. Trust, the confidence level of signals based on intermarket conditions. The bot also explains visual elements on the chart, what they represent, and how they may affect market behavior. An important point, the system works on most assets and time frames using default settings. Multi-time frame analysis takes only a few minutes. You do not need to spend time optimizing parameters for every instrument. If desired, the bot can also provide recommendations for customization. And now the most important part, even if you do not have the system indicators installed, and even if you use your own platform, you can still use Pythia System. Simply send the second bot a ticker and time frame, and after a short time, it will return a chart and report similar to what you would receive using the full installed system. This bot is also available on the free plan in fully functional form. Whether you are a professional analyst or a beginner trader, the system can help improve workflow efficiency and market awareness. For experienced traders, it can serve as an additional analytical layer, while for beginners, it can become a practical learning tool for understanding chart behavior in real market conditions. Start using the system right now. Send the bot a ticker and time frame. Once again, you can use the system for free through the Telegram bot, but if you decide to use the full package without limitations, with all indicators and modules always available, how much do you think it costs? 9 Big Mac appear on screen. Yes. Right now, the full Pythia System package costs Prima the same as 9 Big Mac per month. If you enjoyed the video, leave a like and subscribe to our channel. There will be many more interesting market breakdowns ahead. Write in the comments which assets you would like to see analyzed, and we will take your suggestions into account. Good luck to everyone.